Thank you, Malcolm, for the introduction. I'm conscious that we're running a little bit late, and I think I'm the last obstacle between you and your well-deserved lunch. So I will try and keep to time. But as Malcolm said, we've had two pivots in the Cogora business since Beringea first got involved. We've also had 4 Beringea-funded acquisitions, and along the way, the divestment of half of our business. So we've been very, very busy, and I think it may be a good example of how we as a management team have been able to rely upon Beringea's guidance, counsel, and investment over that period of time. So I'll start with who we are, what we do, where we came from, where we're going, and along that journey, we're going to be looking at the pivoting of the business. So we describe ourselves today as a media and marketing services company specializing in healthcare. 4 years ago, we would have described ourselves as a media business specializing in healthcare. So that's a clue as to how we've transitioned the business along the way. What makes us different? Now, this is something that we used to rely and trade upon when we were a media business, or we still are, but when our sole focus was media, we used to trade on the fact that we had very, very deep engagement with our community of healthcare professionals. Now that we're moving into the marketing services or advertising agency, marketing services ad agency, I'm not sure how familiar you are with the sector, but they're interchangeable really. But as we move into that advertising agency sector, that engagement, deep engagement that we have with that community has become more important and is really our most, our competitive advantage. And that engagement with the community is a byproduct, I guess, of the work that we've been doing within the media sector over a number of years. Cogora has been around since 1987, so that's 29 years. Pulse, which is a brand that we recently purchased, has been active in the marketplace since 1960. That was when it published its first magazine. So we have a long, deep-rooted business trading upon our media in engaging with healthcare professionals. Fortunately, and I think this is one of the reasons that makes that engagement so deep, is that healthcare professionals do have not only a need, but a desire to constantly keep themselves up to date with the latest technology developments, the latest medical news, the latest happenings and goings on within their sector. So that desire, that need to be constantly updated is something that we've leveraged. So now we see ourselves as being the focal point for GPs, nurses, practice managers. Whenever they need news or education, we can provide that to them through our brands. All of these brands started out as life as print magazines, and they've now all extended into events, conferences, websites. We run the leading platform for GP jobs. So GPs looking for jobs will come to Pulse. We also run about 200 training days a year for nurses and GPs. We run over 110 conferences that attract about 10,000 delegates. So our touch points with the community are extensive. The clients that we work with, not surprisingly, I think about 70% of our revenue is from big pharma. Another big, I think 18 of the top 20 pharma companies are clients of ours at the moment. So we've got good penetration within the big drug companies. We also do a lot of business with FMCG, so Reckitt, Procter & Gamble, Johnson & Johnson, those FMCG companies that have a healthcare presence are very, very important clients of ours. And we also do some work with medical device companies such as Philips and GE. So I'm going to play you a short video now, which I think articulates our offering to the market. It's 1 minute, 22 seconds.
With so many different healthcare agencies in the marketplace, selecting a new partner can be challenging and risky. When all you really have to go on is a sanitized PowerPoint and a few case studies, It's no wonder that so many marketers stick with the people they've worked with in the past, even if they're no longer a perfect fit. Cogora is different. We sit at the heart of a highly engaged community of 220,000 healthcare professionals. For over 25 years, our market-leading portfolio of media brands have become their most valued sources of medical news and education. In return, our community generates high-quality quantitative and qualitative data that gives us deep insight into what healthcare professionals think, do, and really need. Our agency teams then use this knowledge to create innovative and flexible marketing campaigns and education programs which are presented back to the community to deliver impactful, predictable outcomes. We take the risk out of choosing a new agency. Cogora, we know healthcare.
So that's how we present ourselves today. It's about leveraging the community to provide the research and insight at the beginning of a campaign and using our brands at the end of the campaign for distribution. No more complicated than that, really. Let me just walk you through the history of the business. Original company. Some of you, I know from previous events, have been invested with Beringea for quite a long time, and you may know our business through our previous incarnation, which was Camden Publishing. That business was formed in 1987 as a print publishing company across a variety of industries, and over the years it began to focus on the ultra-high net worth family office market and the healthcare market. We used to refer to it as the sick and the rich. No synergies between the two whatsoever. That's just how the business developed. I originally got involved in 2004. Prior to that, I was running a company in New York that I had founded in 1991 that was selling information to Wall Street firms in the financial services sector. And I sold that business in 2001, exactly 10 years later, moved back to London and was looking for something to do, and got involved with Camden as an investor and took over the business shortly after. So at that time, it was health and wealth, broad media business, print, events, conferences, that sort of thing. 2006, I orchestrated a management buyout of the business, which was funded by Beringea. That was my first involvement with Beringea, but we were buying out the two founders of the business together with the investors that had come in with me 2 years prior. Our ultra-high net worth Camden Wealth business was almost by definition international. First acquisition that we made in 2011, again it was Beringea funded, was buying our major competitor, which was a New York, San Francisco based firm called the Institute for Private Investors. That was really an opportunity to put our stamp on the market, and we were then, I think, the leading international player within that niche of providing insight and intelligence to the ultra-high net worth community. That was a very nice acquisition, integrated very quickly. It was priced right. That was a nice deal. 2 years later, we decided to sell it, which may seem slightly schizophrenic, but during that period of time, we were having some very interesting developments on our healthcare side, which I think was a precursor to the pivot. We had also developed a very valuable asset in our Camden Wealth business, and we had a family office, quite aptly, that was very, very keen to buy it. And I think in the background, we recognized that given the dynamics between the two businesses, it was a question of focusing on one or the other. We decided to sell the wealth business, so we were then fully focused on building out that healthcare franchise. So the marketing services pivot, I think you probably got the point from the video, but it's essentially about taking what the media business, which was very tactically oriented. We were almost selling a product, and it was verging on being commoditized, if you will. We were selling a page of advertising or we were selling a booth at a conference. We had no opportunity to really leverage our community and be involved in the strategy, creating the strategy, informing a campaign on a new drug launch, for example. We really got no involvement at that end of the market. So that was really where we wanted to get to. And we felt that our community and our research and insight capability gave us the ability, or at least the ingredients, to play in that space. So on the right-hand side, that's where we needed to get to. Give you another example of how to look at it. This is a very, very simplified life cycle, if you will, of the sales and marketing process when a new drug is launched or a new branding exercise is undertaken. Our media business was stuck at the bottom. Distribution, we were very, very good at distribution. That's why people came to us. And I think you've got the point by now for the value of the community. We had a competitive advantage at the market research end. Creative we had through our media business, so it was simply, and I say simply, I'm oversimplifying it, but it was a case of bolting on a strategic element to our business so that we could join up that life cycle. I think the attraction, if it's not terribly clear, is that that's where the money is. I'll give you a very good example, actually, a very quick example. We're doing a big program at the moment with Reckitt Benckiser with their over-the-counter reflux product called Gaviscon, which I'm sure you know. And that has all of the characteristics of this life cycle. The tactical or distribution element is probably about 15-20% of the spend. But now with our marketing services proposition, we're able to control the whole of that, so we're getting 100% of the money. And I think with Gaviscon, it will lead to a 1, 2, 3 year program. So it's higher margin, longer relationship, stickier relationship. So I think the opportunity there was very, very clear for everybody to see. So the first thing we did immediately selling the wealth business was to set about a rebranding exercise, changing our name from Camden Health to Cogora. That was an opportunity for us to create a new logo, a fresh look, a fresh presentation to the market, which was in line with the fresh new services that we're about to provide. Rebranding businesses is often quite complicated and quite risky. Fortunately, our clients knew us by our brands. So for us to rebrand from Camden Health to Cogora was a relatively simple exercise. But I think it was an important one, and it also enabled us to reposition the business with less of an emphasis on media and more of an emphasis on the marketing services side. 3 or 4 months later, with extraordinary timing, it was really bizarre. We were presented with the opportunity to buy Pulse, which is the leading brand for GPs in the marketplace. GPs represent the top of the pyramid, if you will, top of the food chain in the UK primary care sector. They're the market, or they're the community that everybody wants to target. So this was a wonderful opportunity for us to fill a gap, fill a void in our community, and buy in a market-leading brand with very, very good timing. So this was a community that we could leverage again for the marketing services platform. In 2015, I think 18 months later, our marketing services, our organic growth on the marketing side was doing very, very well. The clients were responsive. Our team were able to deliver those programs. Business was good. We were growing nicely, but we still felt that there was something missing. We still felt that it was worth us buying another entity to really stamp our mark on the sector and to say to our clients that we were very, very serious about playing in this space. So after quite a bit of searching, we came across a business called PCM Healthcare, which was a 25 person business based out of the Docklands, and had for the last 12 or 13 years established a very strong reputation globally in providing education and promotional services to the big drug companies. I'll give you a quick example of a program that we're working on at the moment with Novartis in cardiology. This is a worldwide program through Canada, Australia, UK, Sweden, and Spain. And this is training cardiologists or giving them medical updates. But it's a €3 million program across 16 and 17, but it's one of the largest educational grants that Novartis have ever issued. And we're just in the middle of that now, but I think that's a good indication of the sort of program that PCM were able to secure. We would never in a million years have been able to get that. So now PCM is part of the group. We're able to leverage that expertise and that talent. 2016, we acquired, this was just 2 or 3 months ago actually, we acquired a media brand, again going back to our media roots, funnily enough, but here we've got one eye on the media possibilities and the other eye on the opportunity of building out this community for our marketing services activity. Again, very fortuitous from a timing perspective. The government has announced almost weekly now, I think there's stories coming out talking about the importance of pharmacists and how they're going to be promoted or positioned as gatekeepers between the patient and the GP. So I think the timing here couldn't be better, really. Just a quick look at our financials. Probably nothing that I've said means anything if there isn't the underlying financial performance. Fortunately, I think we've had that. We sold the wealth business in 2013. I think at that time our wealth business was about 65% of our revenue, so it was by far the biggest piece of the group. And since then we've grown the revenues on the healthcare side from 4 and change to 14 for this year. Slightly over 30% growth rate, which I think is good. And there's a mixture of organic as well as the acquisitive growth there. Revenue by geography. I mentioned that PCM were international, global. Cogora, conversely, was very, very UK. So part of the PCM acquisition was premised or was what made it attractive was the opportunity to move out to the UK and diversify our revenue. Post-Brexit, that may have been a good call. So we've now increased our rest of world revenue from 11% to 31%. On the top right hand, revenue split between media and agency is now exactly 50-50. So over the past 4 years, this has been not only a pivot, but I think a true transformation. And gross profit, bottom right-hand corner, 56% of our gross profit this year will come from the agency, marketing services side, validating my earlier point about the fact that this stuff is higher margin. But I expect that to increase materially as we go forward. So just a quick word on our future. We operate in a lovely, lovely business, in a lovely sector. It's very, very stable. There's always cash on the table. There is innovation. There is new drug discoveries. There's an aging population. There are some macro drivers that are always going to support the growth of the healthcare industry. Pharma companies are looking to increasingly outsource, particularly their sales and marketing functions. So I think we'll be beneficiaries there. And Cogora, as a marketing services business, operates in a very fragmented market where there is little or no differentiation between our competitors. We, on the other hand, have several points of competitive advantage, tangible, you can almost touch them. So I think our offering in the marketplace will resonate and will get better as time goes by. And we're focused on organic growth, transitioning the clients that we have from the media business up the value chain to the agency side. So that transition, I think, is something that we're very, very focused on, and continuing to leverage and drag out more value from the acquisitions that we've made over the last couple of years. So on that note, thank you for your attention.